A dependent is an individual who relies on another person for financial support and can be claimed as a dependent on a tax return. To qualify as a dependent, the individual must meet certain requirements, including a relationship test, a residency test, and an income test. The relationship test requires the dependent to be a relative of the taxpayer, such as a child, parent, or sibling. The residency test requires the dependent to live with the taxpayer for at least 6 months of the year. Although there are some exceptions for dependents who are away from home due to education or other reasons. The income test requires the dependent to have income below a certain threshold, which varies from year to year. In general, a dependent cannot have gross income exceeding the exemption amount, which is the amount that can be deducted from taxable income. However, there are some exceptions to this rule, such as for dependents who are students or have disabilities. For example, if a taxpayer has a child who is under the age of 19 and lives with them for the entire year, that child would qualify as a dependent. The taxpayer could claim the child as a dependent on their tax return and potentially receive a tax deduction or credit. Best practices for claiming dependents on a tax return include keeping accurate records of the dependent's income and expenses, as well as documentation of the dependent's relationship to the taxpayer. It is also important to stay up to date on any changes to tax laws and regulations regarding dependents, as these can impact the ability to claim a dependent on a tax return. By understanding the requirements and best practices for claiming dependents, taxpayers can ensure they are taking advantage of the tax benefits available to them and accurately reporting their dependents on their tax return. This can help to reduce tax liability and avoid any potential penalties or fines.